Hello, and welcome back to Explain the Charts. Today is June 15th, 2025, and we are going to analyze USDCAD using both the news and the chart data. Recent news indicates a complex interplay of factors influencing the USDCAD pair. We have the Canadian dollar facing pressure from potentially faster interest rate easing by the Bank of Canada compared to the Federal Reserve. However, rising oil prices, a major Canadian export, are providing some support. Political uncertainty in Canada, mentioned in FexStreet's reports, may also contribute to volatility. Let's switch over to the daily chart to see how these factors are reflected in price action. Looking at the daily chart, we can see a choppy price action over the past year. From February to around May, we traded in a range, later breaking higher into July. However, this was followed by a steep decline before a choppy period of consolidation that seems to have been in effect since late 2024. If we narrow down to the more recent time frame from the start of 2025, we see this consolidation a bit better. Note the large candles with very large swings as the market decides on a direction. The most recent candle is showing a bearish direction. Let's dive into the 1-hour chart for a more granular view of recent price movements. Looking at the 1-hour chart, we see some recent short-term downward trends. The price seems to be struggling to break above the 1.37 level. This level could be considered an immediate resistance. Zooming into the very recent data, the 15-minute chart gives us an even finer picture. The price is currently hovering around 1.37, showing little volatility. This suggests a period of indecision, and we might be approaching a decision point. On the 15-minute chart, we can also identify a trend downwards. Now, let's consider some unbiased predictions and important levels. If the price breaks above 1.37, we could see a move towards 1.375. But given the downward trend and indecision, this is not very likely. This would be reinforced if the Bank of Canada signals a slower pace of interest rate cuts or if oil prices surge dramatically. If the price breaks below 1.36, the next support level to watch would be the October low of 1.3472, and a drop here is somewhat likely given recent trends. Look out for any news regarding the Federal Reserve's interest rate decision on June 18th, as mentioned in Forex.com's reporting.